Hey everyone, how are you guys doing? If you're new here, my name is Anays Caceres. I'm a childcare business owner, consultant, and wannabe lifestyle content creator here on YouTube. And you could really help me out with that by scrolling down and clicking that subscribe button. While you're down there, you might as well turn the notifications on after you subscribe so that you can be notified every single time I post a new video. This video that you're about to watch is the replay of a webinar that I held live. This webinar was presented by childcaresites.com, and you can definitely register for more webinars that you can access for free by visiting childcaresites.com. This one in particular was hosted by Anays from Pay Plus Accounting. Anays is a CPA, and she really broke down the process of structuring your childcare business entity and what that process looks like, what each step means, and basically in less than 90 minutes took us through a 62 slide presentation of how to start a childcare business. There were so many great takeaways within this webinar presentation, so I really hope you enjoy. Hi everyone. Thank you so much for joining us on today's webinar. While everybody is logging on, I'm just going to quickly, since this is not my presentation anymore, I do want to just thank everybody for being here. Anays has a lot to get through today, so we're not going to go through the whole rules of how this is going to work. It's just going to be Anays going through her slides, and we'll have a quick about 10 to 15 minute Q&A session towards the end. So because she has so much to get through, I want to go ahead and get started. And once again, thank you all for being here. And thank you, Anays, for being here and talking to us about this very important subject. I know a lot of programs are struggling right now or worried about possibly struggling in the near future because they were closed for an extended period of time or have low enrollment. So I am just grateful for you giving us this opportunity to hear some of your strategies.
My pleasure. My pleasure.
So whenever you're ready, just go ahead and start. For everyone watching, you can use the Q&A box as things come up, and we will address your questions at the end. So please, if you have any questions, use the Q&A box rather than the raise hands.
Awesome.
So thank you.
So I put these quotes here just so that sometimes we kind of forget what our purpose is. And in these hard times, we have to remember. So, I mean, if you watch the replay, you're going to be able to see the quotes. But I just want everybody to understand that it is hard, but it is our job. And that's what we love, and that's what we're here for. So we're very excited. So the purpose of this webinar is, for one, to help you understand the finances related to daycare, help you understand the difference between you and your daycare, find out a meaning, because again, we sometimes forget why we do things, help you excel to your biggest potential, remove any hurdles relating to finances, and how do we adapt to the pandemic aftermath. So my name is Anays. I'm the CPA and CEO of Pay Plus Accounting Solutions. I also own a few other companies, Dream House Development, Learning Boss Up University. I'm a business coach and I'm a published author. I've been an accountant for 20 years and a daycare specialist for about 10 years now. So I'm just gonna break down what we're going through real quick so that you understand everything. We're gonna go through entity formation, who are you and your business, labor law, your responsibility as an employer, human resources and the importance of cultural development, business budgeting, and pandemic recovery and how to come back stronger. So we're just gonna jump right into it. So this sheet, I don't want it to intimidate you, but basically it's different business entity types, what are the best for, and what are the differences when it comes to taxes and the tax forms. and what are the most best scenarios and most beneficial for you. So for most of you that are DBAs or sole proprietors, right? Or you just registered your daycare under your name with your social, that is basically best for a single owner. And that's good for someone who really is not interested in any future planning, and someone who is okay with just keeping things as they go, right? And for taxes, that is basically self-employment tax. The way that you file those taxes is at the end of the year, whatever profit and loss the daycare leaves you, that is going to be what's called your taxable income. Your taxable income has two types of taxes, which is income tax and self-employment tax. What you can do to avoid a big tax liability at the end of the year is pay quarterly estimates, which are called 1040-ES, right? The tax form is a Schedule C. At this point, you do not have a W-2 or any 1099. So again, this is good for someone who wants to keep a low tax payment, but wants to meet the requirements of Social Security and Medicare wages. Our next is limited liability corporation, which is very similar to a DBA if you have a single owner. And the good thing is that you have benefits of both worlds, as a single owner and as a corporation, because things are kept separate to a limit. With an LLC, you can be on W-2, which means that you pay your taxes throughout the year as an employee. And at the end of the year, you will have self-employment tax if you have a profit, if you are a single member. Now, if you are a multiple member, then you get what's called a K-1. The K-1 is basically a form, basically a W-2, but just showing what your profit and losses for the year, distributed among all the owners or members. Now, if it's a single member, you file a Schedule C, which goes right into your personal taxes. If it's a multi-member, that is a separate corporation, which is called 1065. And if you choose an S Corp election, it is a completely different form. I know someone had asked prior to, how do you pay yourself with a limited liability company? You can do two things. You can either put yourself on payroll, pay yourself wages throughout the year, or you can take out what's called draws. You can give yourself a draw periodically, however you see fit. And, you just pay, there's no taxes withdrawn from that until the end of the year once you file your tax return. The next entity is C Corp. C Corp is basically a corporation that keeps you separate from the business. And here you do have to pay what's called corporate taxes at the end of the year. In addition to that, someone has to be on payroll. And as a business owner, you should be on payroll, which you have a W-2. What this does that is a convenient for people is that it keeps you separate from your business. And I'm going to touch base into that later on. But it's important to understand what your personal planning and preferences for your financials are, because that's going to help you determine what's best. Some people think, oh, well, with a corp, I'm going to pay double taxes. But you know what? It might be more convenient for you to do so depending on your situation. So we're going to speak about that later. An S Corp is also a corporation. Now, the only difference is that an S Corp plays a role as an LLC or a partnership, a 1065, where at the end of the year, the profit is given to you in a K-1. The only difference is that an S Corp does not pay self-employment tax, only pays income tax. Now, prior years, a lot of people would take advantage of this election so that they don't have to pay self-employment tax, and it's just the income will wash through. Unfortunately, IRS caught up to us, and now we are required to have someone on payroll automatically for an S Corp, especially the owner. S Corp gives you the flexibility of not having to pay corporate taxes on your federal tax return, only on your state. And there's some states that do not have state taxes. So depending where you're located, it might benefit you. One thing to keep in mind with S Corps for our parents who want your earned income credit, your child tax credit at the end of the year, if you have a profit of $3,500 or over, you do not qualify for those credits. So the best way to take advantage of an S Corp and be able to get all the benefits you can at the end of the tax year is put yourself on payroll. That way, You keep the profit low, but you still have income that you utilize, you report it, you pay taxes on, but you can also benefit the credits, right? And then lastly, partnerships, which can be an LLC, like I previously mentioned, an S Corp, or even a C Corp. For daycares, it's very rare to see partnerships or multi-member companies because of the licensing requirements, but sometimes you will come across that, and that would make all the difference, right? So now this is going to explain what's best for you depending on your goals. What you have to ask yourself is, are you more interested in A, being able to build a business while getting as much assistance and paying the lowest tax possible? Let's say you have children. Maybe you're starting and maybe you still need health insurance help. Maybe you live in an area where your income has to be low in order for you to qualify for any rental assistance. That is possible being a business owner. And we have to remember, your business, you're starting out when you're building a business. That doesn't make you a millionaire. So you have all the rights to plan yourself in a way where you can survive building a business, raising a family, and at the same time, you're doing things legally and you're doing things the right way for you and your family, right? The next option is for future investment planning. Some people want to purchase a house, and let's say you have a court and you give yourself an income of, let's just say, $50,000 a year, but your corp has a loss. When you go and qualify or try to qualify for a mortgage, the mortgage company is going to go based on your W-2, not the loss of your business. If you have a Schedule C or a single member LLC and you're not on payroll, they are going to look at that as basically the factor for your income. So if your income fluctuates in the business every year, that might not be good if you're trying to do future investments, because that might, discredit you a bit with mortgage companies. So this is why keeping things separate is important, right? So if you want to do Group A, then the best entity is a DBA, which again is subject to self-employment tax, and it is considered a small business. You can write off all the expenses relating to the business. An LLC, which allows you to earn wages on a W-2. And if you plan your finances correctly, you can demonstrate a wage income, and you can also possibly demonstrate losses at the end of the year to lower your tax liability. Not that you're scamming IRS, but simply you know when and where to use your money. Another thing is that it allows you to, again, take advantage of any situation, but keep yourself separate from the business. C Corp as well. With a C Corp, it is a completely different person. You are one thing, your company is the other. Whatever your company does or doesn't do doesn't matter to you, because this is your W-2 and that is your income, right? Now, if you would like Group B, then a C Corp also works in the same purpose, an S Corp or an LLC as well. Because again, you have income that washes through you, but you also have the ability to report wages on W-2. Now, with an S Corp and a C Corp, there are many different things on how you report expenses for the daycare. You may report, for instance, let's just say you have a computer room and you purchase $3,000 worth of computers. With a DBA or an LLC, you can write that off as an expense. However, with an S Corp or a C Corp, it might be more beneficial to put that in your balance sheet and make that an asset. Now, that is a whole totally different long concept that I'm not going to go through, but I just want you to understand that not everything is deductible with every entity. Not everything shows the same way you would think with every entity when it comes to your tax filing, right? So an LLC, like I said, it allows you to earn your W-2, but if you're doing future investment planning, now because you have a limited liability corporation, there are certain things on financial statements that can give you personal power, which is a good thing, right? And obviously the ultimate goal is to start on step A and then grow to step B. You cannot do both at the same time, but at least with this proper understanding, you know where to place yourself. You cannot, you can start with a DBA or LLC and then eventually change your business entity close that entity and start a new one, a corporation. But that, at least here in New York, it is a problem when you already have an established daycare license and you want to switch over. It's not as easy depending on the person that you have taking care of that for you. So sometimes it's best to just start from that entity from the beginning. So in other words, let's just say that you are a person, I'm a single mom, and I have, children, and I want to be able to make sure that I can qualify for any financial assistance for my children, but I know that in 5 years I want to purchase a house. Well, you know what? It might just be beneficial for me to start with a corporation anyway. Yes, I'm going to pay corporate taxes at the end of the year, but the wages that I have on my corp, I can control to accommodate me as a mom. And also in the future, I can also show more stability of income. You see, so it works both ways. And sometimes people think, well, a corp pays so much taxes and then you're going to pay. Listen, if you try to do that, you're going to end up paying double tax in the long run, and it's going to cost you too much headache. So sometimes it's best to just start at that one entity and then just work your way through it, right? So now we're going to go into legal structure. A lot of people don't know how to separate themselves from the business, right? Once you choose your entity, the next step is to get an EIN. An EIN is basically a social security number for a company. It is the same thing. No two people can have the same number, and no two people are the same people or the same number. If you are a twin, your social might be different by one number. At the end of the day, you're still separate, right? And we need to understand this, because when you put yourself on payroll, you pay taxes as an employee, and then your business pays taxes as an employer. And sometimes we get confused and we think, oh, I'm the one paying taxes and I'm doing this, or my business, and we don't realize what expense belongs to you and what expense belongs to your daycare. So to give you an example, I had a client that had a corp, and she was using the money from the daycare for her personal stuff, right? And she kept saying, I cannot afford this, I cannot afford that. And I'm telling her, how could you not afford if you have a business and you know how much money you make and you know how much money you want to make as an individual, then all you have to do is, obviously calculate everything. You pay yourself as an individual, whatever bills the business has, but you are you. You cannot mix the two. And what happens is that sometimes we make that mistake, and then all of a sudden we're confused. And that's when you miscalculate and then commingle funds. And then all of a sudden everything just goes crazy. So it's important to understand that you own the business, but you are not the business, right? So if you keep that, you'll be able to make better decisions. And it's very important to know that even with a DBA sole proprietorship, always have a separate business account, because you never want to mix transactions. You always want to keep things separate. And it's not just so much about doing the right thing legally, but it's more for your peace of mind, because you're going to know your finances better when you see things on paper and you see things separate, right? So now let's go over the components to day-to-day operations. Labor laws. Like I said earlier, every C Corp and S Corp must have at least one employee reported to IRS. And in New York, I don't know about any other states, but in New York, the ratio of infants has to be 2 employees, 1 employee per 2 infants. I'm not sure in the other states, but here it is like that. So just keep that in mind, that, if you're planning on opening up a daycare, and you have, we're going to get to this later, but you have to understand that you have a level of employees to maintain just off that strength, not even corp. Because a lot of people think, oh, well, I don't want people on payroll. Listen, this is what you are required to do by your licensing, not even the corp or IRS. So those are things to keep in mind, right? So now let's get into payroll. An employee and a 1099, and what is the difference? And, I want you guys to understand, we want you to learn what's going to work for you during this pandemic and after. But if you don't know the base, that's going to be a problem. I would say 90% of the people that I've had helped during this pandemic that were not my clients came with this problem. They did not know the difference between a 1099 and a W-2. And this is why they either were not able to get the Paycheck Protection Program, they were not able to get unemployment insurance, and now they're facing labor problems because they had people who they were paying on 1099 that they weren't supposed to, and have reported them to the Department of Labor. So now they're gonna look at bigger problems. So this is the difference. 1099 MISC is only for independent contractors. And an independent contractor is someone that you do not control their hours. You simply control the work that you want, the result. So if I say, I need you to clean my house every week and I wanna make sure that everything is spick and span, to me, it doesn't matter how many hours it takes you. It doesn't matter what time you come in and come out, as long as it accommodates me. What matters is that you get it done, and that you get it done, and that we have already agreed on a price, and that's what's gonna work for both of us, right? With a 1099, a person should file a W-9. So in a daycare industry, people who are on 1099 should only be if you have someone coming in to teach your children sign language, if you have someone coming in to teach them different languages, giving dance classes, giving music classes. But a person that is a provider or an assistant provider is not a 1099, because you control the time that they come in and that they come out. If you do get people on 1099, like independent contractors, you have to make sure that you have two things. One, a W-9. Why? Because at the end of the year, see, what happens is this: we're running our business and we forget what happens, and then tax time comes, and then, oh my God, we're stuck with a liability. Once you have your W-9 in file, at the end of the year, you're not going to have a problem having to give those recipients their 1099 forms, and that's going to have less problems to you. In addition to that, anyone that you work with, you should have their information, whether it's their business or their personal, just because it's the right thing to do for the, you have your good state of mind, right? So a 1099 is required to be given to people once you pay them over $600 per year. And another very important thing that a self-employed, well, an independent contractor should have is workers' comp insurance for you. And they need to name you in their policy. Why? Workers' comp, which I'm going to go by, I'm going to go through that later, is so that if someone gets hurt on the job, they have insurance to cover them. So if you are sitting here and you're driving a car with no insurance and you crash, you're going to have to be liable to pay the person money, right? Because if not, you don't have insurance. This is the same concept. If a person is coming into your business to do a service for you as an independent contractor, they should be giving you their workers' comp insurance, basically a certificate holder, so that if anything happens, they have their own insurance, they're covered, not that is coming out of you, right? So now a W-2 employee is someone that you hire to perform a duty or service in exchange for monetary or tangible compensation. We get confused. Understand this. If you give someone room and board, if you give someone meals, even if you give someone a pair of sneakers in exchange for a service, that is wages. Technically, you're supposed to report that to IRS and, pay taxes on it as well as them. An employee is someone that you control how you want the work done and when. So if you tell them that they need to go there from 9 to 5, that is an employee. With an employee, you should always have their information, name, social. I'm going to go by that later, but it's always important to have documents like their W-4, I-9, and get that information once you hire them, not in the middle of the year, not when you decided that you're going to get rid of them, not when it's time for your accountant to ask you for tax season. It should be done once you hire them. Remember, these are people going into your property, your business, and you don't know who they are. So you always need to take care of yourself, right? So these are two examples, right? Sam Smith is an electrician. He submitted a bid for $6,400 to a housing complex for electrical work. Per the terms of his contract, every 2 weeks for the next 10 weeks, he is to receive a payment of $1,280. This is not considered payment by the hour, even if he works more or less than 400 hours to complete the work. Sam will receive his $6,400. He also performs additional electrical installations under contracts with other companies. that he obtained through advertisement. He is an independent contractor. If Sam was a bilingual teacher, a dance teacher, an art teacher that would come in and do certain works for you per month, that is an independent contractor. Now, Sarah is a salesperson employed by Rob Robinson, an auto dealer. She works 6 days a week, is on duty in Rob's showroom, and assigned certain days and times. She appraises trade-in, but her appraisals are subject to the sales manager approval, which means that she answers to someone, right? She lists the prospective clients, to belong to the dealer, and she must develop lead and reports to the sales manager. Because of her experience, she only requires minimal assistance in closing and financing sales and in other phases of her work. She's paid a commission and is eligible for prizes and bonus referred by Rob. Rob pays her health insurance and group insurance. She is an employee. You notice it did not mention wages and did not mention W-2. However, it did mention that Rob controls her time in, controls what she does. She needs to get approval for certain things and no approval for other things. But he also contributes to his health insurance and life insurance. So that is the difference. Some people, you may pay someone commission, you may offer incentives, but if you control what time they clock in, what time they clock out, and they come and do something the way that you want it done, they are your employee, okay? So these are a few facts pertaining to labor laws. The owner of a DBA, so that is Anays Caceres doing business as Anays Daycare, right? Does not belong on W-2 with wages. They are subject to a draw, which means every week I can give myself $500. And at the end of the year, I report those $500 at 52 weeks. And that is my income for the end of the year. This, again, is beneficial for people because you don't have to pay taxes on your income throughout the year. You pay them at the end. Depending on your tax situation is whether you get money back or you have to pay back or not. That's a totally different subject. But people who have a DBA should not be on W-2 wages, right? An employee cannot be offered off the books income. A 1099 is not a supplemental for that. And the penalties for incorrectly reporting wages are very bad, especially in New York State. So for those that I've heard before say, oh, well, I thought it was okay because I was giving them a 1099 at the end of the year. No, it's not okay because that is not the way that you're supposed to report an employee. They're supposed to be on payroll. And now let me give you an example with the pandemic. There are so many people who try to get unemployment and they do not qualify. Why? Because they weren't on wages. Now, because of the pandemic situation, they are approving people to get unemployment, but you know what's going to happen to those business owners who did not report those people on payroll? They're going to get hit with horrible penalties because technically you weren't supposed to, right? And an employer is required to pay the employee all wages, even if you terminate them or they quit. You cannot withhold an employee's paycheck out of spite or, out of anger or pettiness. You just can't do that, right? And like I said, in regards to the workers' comp for an independent contractor, as an employer, you are required to get a workers' comp and a disability policy prior to hiring employees, and I'm going to get to that later on. So now, I know in New York City, I know there's people here that probably are not from New York. In New York City, minimum wage is $15 an hour for all employees. I know Long Island it's different, but in New York City, it is $15 an hour, and it's not subject to if you have more than a certain amount of employees. No, it's straight across the board. An employee is to be paid time and a half after 40 hours a week. So for those providers in New York where you have 10-hour days and you have a 2-hour break, your employee is required to be on site even if they are not working, which means that you have to pay them. So if they're working 10-hour days and they're working 5 days a week, it's supposed to be 40 hours at straight time, 10 hours at time and a half. If that's something that you cannot afford, then you can get creative with it and just maybe have people there for 4 days a week or switch up the schedule. But you cannot assume that because a person is sitting down for 2 hours during nap time that it is not overtime and that they're working for free for those 2 hours, because they're not. They're required to be on the job site. So per Department of Labor laws, they are supposed to get paid for that. Now, paid and sick leave. Paid and sick leave, safe and sick leave. Safe was just added this year. That is required for any employers who have 5 or more employees. Last year it was for everyone. Now it's if you have 5 or more. And if you have less than 5, you still have to allow them to take these days, but you don't have to pay them for it, right? Now, in order for an employee to qualify for either, they must work over 80 hours in a year to be eligible. But an employee must work 120 days before being able to take sick leave. So if a person starts working in January, I start working for you in January and I'm a full-time employee, I have to first work those 80 hours and I have to wait until April 1st. Because remember, January, February, March is 30, 40, 30, 60, 90, Jesus Christ. So April 1st is when I'm able to start taking sick leave. Now, how is the hours accrued or given or calculated? For every 30 hours I work, I get 1 hour that goes for paid sick or paid safe leave. And per year, I have max 40 hours. The best way to do this is your payroll provider is supposed to be keeping track of that. Or if you want to keep track of it yourself. So basically, if I work 40 hours a week, that means in 1 week I have already done 30 hours. Those 30 hours is equivalent to 1 hour. So that's just the way it works. You're going to calculate it like that. Safe leave is new. And safe leave is in the event that someone is going through maybe domestic violence, or if someone has to move because, they're getting they got attacked or someone is after them. Also with oh my God, it's in the tip of my tongue. I can't think. Sorry, guys. Human trafficking, anything of that nature that they have to leave, that they're afraid of their life. That is what paid safe leave is for. So now, paid family leave. If you notice on payroll checks, you see something that says, at least here in New York, NYSDI and then PFL or NYPFL. That is paid family leave. This allows an employee to take up to 10 weeks of leave, and it provides them with job protection so that when they are ready to come back, they still have their job. The leave is taken for them to either bond with a new baby, take care of a close relative, or situations like if they have military husband or wife aboard, right? Now, in order for you to qualify, it is based on the disability carrier to approve it. As an employer, you do not pay this out of pocket. Your employee makes a contribution to this out of every paycheck that they receive. And if an employee needs to take this, you give them your forms, they submit it themselves to the disability company, and it's up to them to pay them. You have no control of that, and you're not responsible for that, right? Now, an employee has to be a full-timer, and they have to have worked already 26 consecutive weeks. And if it's a part-timer, they have to have worked over 175 days. And then I'm going to talk to you about workers' comp and disability. So like I said earlier, workers' comp is so that if someone gets hurt in your premises, in your job site, they are covered, right? A lot of people commit fraud, employees commit fraud, and you as the employer have the right to contest it. If a person falls on the job site or claims they fall on your job site, and then you see them hanging out or mowing the lawn, then you have the right to report them to workers' comp. And workers' comp does investigate, and workers' comp does look at doctor notes, and they do this all day, every day. So it's very hard for someone to try to kind of screw you over and commit fraud, but it happens. It happens. Workers' comp, once an employee is on payroll, they're under your workers' comp policy. And the workers' comp board will ask you for payroll reports in the event, and that's how they will know that person actually worked for you. It's not like I can walk to your business and slip and fall and say, oh my God, look, I fell when I work here. No, that's all verifiable. And disability insurance is insurance that replaces a portion of the income if a person becomes ill. So, example, I'm going on maternity leave. I go for disability insurance. But after I go for disability, now I want paid family leave for an additional 10 weeks. I will not qualify for both. The insurance company will not allow it. However, I can get disability insurance from my maternity leave, and my husband can get paid family leave through his employer so that he can stay with the baby for an extra 10 weeks. So I got to stay with the baby for 6 weeks, and now he has 10 weeks. And we both have job protection. Now, let's say that I broke my arm and I can't work, or I broke my leg, I can't work. Well, disability insurance covers a portion of my income. This does not come out of your pocket as far as like a regular payroll expense. It is paid from the disability insurance carrier directly to the employees. And understand this, in New York State, if you do not have workers' comp or disability, the penalties are $2,000 per calendar days, 10 days, and it's for both individuals. So you get a penalty for workers' comp and another one for disability. So you guys have to be very careful. That is very important to have. Workers' comp, they do both policies. They do periodic payroll reporting, which the purpose of that is to confirm the payroll that you have so that they can quote you correctly for the policy. But if you fail to submit those reports, they can actually cancel your policy, and that could be a problem. Here in New York, if you have workers' comp board penalties and you do not answer to them or pay them, they can put a stop order in your business and literally shut you down. So that is something that is extremely important. And workers' comp and disability is really not that expensive per year for the daycare industry because there's really not a lot of payroll. So that's something that you should not be afraid of to get if, once you start thinking about hiring employees. Human resources. We are small business owners as daycare providers, but we are not small. You cannot think that you're small. HR is extremely important in every company. For one, it gives you an organizational structure, and it also helps you create a culture where you can create efficiency in your employees and your employee management and relations, right? And remember, you're working with families. Even though you're taking care of children, you're working with families. You want to have a level, a standard in your business where you're always going to have reputation. It's not even just so much about how you treat their children, but also how you have your company and your employees at the job site, right? So it is important because, for one, you need to have clear understanding of the responsibilities belonging both to the employee and the employer. You can establish boundary lines of mutual respect. You have all agreements in writing, and you set clear rules or actions when giving warnings or discussing misconduct. Understand that if you have an issue with an employee and you do not address it, and you do not address it more than once, and all of a sudden you fire them, you know that they can go to unemployment, which will it will cost you eventually. And not only that, but they can contest it with Department of Labor. But if you have your HR in place and you have all the information and all the written documents of when you spoke and the warnings and everything, you are basically backed up, right? It is your responsibility as an employer to provide a safe work environment for your employees. When you are hiring employees, it is always best to have an application where you have emergency contacts, alternative addresses or phone numbers and emails. And also very important, have an employee handbook with your policies. It has your policies, duties, expectations, and this should also have your mission and goals. And here's one thing that's so important that we kind of miss, and we miss it all the time. An employee that makes a good match for your business should understand and agree your mission and goals. Here's what happens. This is your business. No one is going to give the heart and soul that you give to your business like you are. But if a person has the same mindset or the same vision or agrees with your mission, they're going to do the job with love. If a person doesn't, a person is going to be worried about clocking in and clocking out. They're not going to understand what is the purpose of your business, and they're not going to work to accommodate that for you. That they're just going to bring you problems, and you're just going to continue to have to run through employees until you hit a lotto and finally you get a good one. But if you interview an employee and, you ask them specific questions, just think about it like this. The best way to interview someone is when someone asks you, why are you a daycare provider? And you give those answers from the top of your head. You need to ask that person the same thing. And if you see, and you ask them questions, pick their brain, and you'll be able to determine if that person is a good match for you. Because you got to think about it like this. They wake up every day and they get to work. They are at will employment. You're not forcing them. You're not putting a gun to their head. That means that they have to want to do this every single day. But a person that doesn't match your vision and like your goals is just going to worry about clocking in and clocking out. They're just not going to care. And you can't expect an employee to care for your business as much as you do, but you can definitely have someone that contributes and that is a good part of the team and the process with you. So now that we understand the foundational aspects, right? Yes.
I do want to ask if we could pause for a second just to
Sure.
get to some of the pandemic related questions before 7 o'clock. And then if anybody, if you guys that are watching are available to continue on listening to the rest after 7, you can continue.
Okay.
But I do want to just jump into some questions before we run out of time. Is that okay?
Yeah, I was going to go through budgeting and then the pandemic. But yeah, we can do that first.
Okay, I just want to, I don't know if the people that have asked questions might have to get off in the next 15 minutes. So let me just ask those questions.
Yes. Go through that.
Paula, I believe, says she wants to know if I have an S corporation, do I have to make a W-2? Do I have to give a W-2 to the employee, even if the employee is also the owner?
Yes, that is now a requirement from IRS.
Okay. And the Royalty Family Academy wants to know, can you elaborate on if employees quits or no longer works at the center, we still have to pay wages? Are you referring to not working through the pandemic? Does the employee file for unemployment?
Yes, because of the pandemic, everyone is technically approved for unemployment. However, if you reopen your business now and an employee refuses to go back to work, they are not eligible for unemployment. And you can report that. You can report that. Now, the reason of refusal might make all the difference whether they continue to get or not, because like now they'll have, for instance, if your children are out of school due to COVID, then, you're eligible for unemployment. But if you have to replace their position because you need, the labor done, you can't do so without having an issue, because technically you're offering them their position back and they don't want to, they're not doing it. They don't want to work.
Right. Okay. And Frazier, or LaShonda Frazier, wants to know, what is the correct way daycare providers that are LLC should pay themselves?
You can do either or. You can put yourself on payroll, or you can give yourself a draw periodically and just pay the taxes at the end of the year. That all depends on what your preference is and what your tax return looks like at the end of the year.
Okay, awesome. Can you explain draw?
So draw is basically you giving yourself a check, like you can say $500 a week and it's all cash, no tax withdrawn or anything, but you record it basically as a payment to you. So if you done let me give you a check and give you a 1099 at the end of the year, it's basically the same thing, except you're not going to give yourself a 1099, but it is going to be recorded at the end of the year as income that you paid yourself.
Okay, thank you. I will say to anybody that does have to leave within the next 10 minutes, could you, this webinar is being recorded, so if you do have to go and you have a burning question, put it in the Q&A box, and we can, we'll probably address it at the very end. And you'll get the replay sent to you tomorrow around this time. Before you continue, Kim Smallhorn wants to know, how do sole proprietors get paid?
Same thing, a draw. They basically can take money as they see fit. No taxes paid, and then at the end of the year, they'll report that as their income.
Okay, perfect. All right, thank you. So again, it's being recorded. If you have to go at 7 o'clock, then just know you'll be sent the replay tomorrow, and we'll do a final set of questions at the very end of Anays's presentation.
Sure. So you want me to skip right over to the pandemic stuff, right?
No, you can continue.
Oh, continue that? Okay.
Yeah, you can continue. If anybody has to go, they can go, and tomorrow, everyone that has registered will receive the link to watch the whole thing as they want to.
Okay, perfect. So, business budgeting. Business budgeting can be done two ways. Either when you're opening a daycare, or how to budget when you already have a daycare. And I'm going to show you both. Opening a daycare. So when you first open up a daycare, you need to ask yourself these three questions. What is my location and market strategy? What is my biggest expense? And what is my goal? Let's use this as an example. We're going to calculate these expenses, right? We have rents, electric, phone, food, supplies, camera, bright wheel, kid care. And as the owner, I want $2,000 a month. That means that my expenses are $3,680 per month. I need to basically earn more money than that to cover. So let's say I say, okay, well, $4,000 a month divided by 4 weeks is $1,000 a week. And if I charge $200 a week, if I have 5 kids, that makes the income. I'm good to go, right? I calculated, I know that I can afford the daycare, I can have money left over, and everything's a-okay. Except that life hits you hard, and all of a sudden we have 4 infants and 1 toddler. Now, like I said earlier, in New York, you need to meet the ratio. So if you have 4 infants, that means that you need to have 2 employees. So what was bringing you $3,200 monthly is now going to cost you, and it's going to cost you $2,400 a month. So now your business budget just went from $3,680 to $6,080. And this is what happens 9 times out of 10. The owner expects a salary and they don't get it because expenses come in that you're not expecting. And this is one of those things when it comes to daycares. When you look at location and market strategy, you have to see what are the rates going for in your area as far as the daycare rates and also the rental rate, because that is technically that's the most expensive expense relating to a daycare. So now that we understand the market, right, we're going to go to what are the rates. And market, this is what I mean. In the Bronx, I'm going to give you an example. You can have where there's a lot of poverty and when you have more, middle to higher income. And what happens is that depending where the location of the daycare is how much you're allowed to charge. I know daycares in Inwood that charge $500 a week per child. And I know daycares here in the Bronx that cannot even get over $180. So that makes a big difference of where your location is. Another thing is the demand and supply. If you're near, for instance, a hospital or a school or a lot of storefront businesses where daycare is high demand, a place where you can offer a special rates for, let's say, hospital workers or for everyone that works on White Plains Road, that's beneficial. Another thing to think about is cash, HRA, ACS, or even network. I have a daycare in the South Bronx. So this owner has 2 daycares, one in the North Bronx, one in the South Bronx. And the one in the South Bronx, she cannot charge the same rates as the one in the North Bronx. But she entered a network for the one in the South Bronx. And what she tells me is, I get paid less, but I have guaranteed income. And that's something that, you can always think about. What type of income can you get from what area, and what is actually convenient for you? Because it has to make sense when you're thinking about opening up a daycare and creating your budget, right? So another thing is that we can consider other ways to making money. I know someone had asked in the Q&A, what are different ways? Well, you can do after school pickup for kids, right? You can do tutoring service for kids that are beyond the daycare age, which means that it doesn't matter the ratio situation. You can do extra things, music or dance class or computer class. And these are things that you have to look at the area that you're going to, because some areas do not fit for these type of things, but some areas do. So the second question is the expense, which is again going back to the area, the rent. There's areas of the Bronx that the rent for a 1-bedroom is the price of a 3-bedroom in the South Bronx. Just like, for instance, in Inwood, in Manhattan, you can pay for a 1-bedroom apartment $2,600 in a 1-bedroom apartment in Inwood. Imagine $2,600 in rent alone. How much will you need to charge? For especially if you have a group family license where you're limited to a certain amount of children, right? So those are things that you have to look at. The rent and then the payroll. And the payroll, again, life comes at you fast. You may be expecting to get toddlers, and then all of a sudden there are no toddlers available, but you have infants on a waiting list. You're going to take whatever you can, but it's important to try to always kind of cover yourself and understand what you might be looking at, right? So again, after school pickup, teenage tutoring, weekend classes, and incorporating pre-K. Now we have this DOE evolution where pre-K can be offered in a daycare, and you actually get paid from DOE with a budget. I mean, that's a totally different webinar, but there are different things that you can offer where it kind of goes into marketing and it goes into your umbrella. One thing that I had one person ask, they have a multi-family home and they have a daycare on one floor. They want to put the pre-K in another floor. And I said, you know what, that's excellent. You know why? Because now you can offer and say, hey, you can bring your child to me at 6 weeks old and your child doesn't leave till age 5, So it's like different things like that. Summer camp, again, with like the music and the theater, those are things that bring income, and you'll be surprised at how much parents would actually like that. Remember, you're serving families, and families want everything together. And if I would much rather have my child with the same person from 6 weeks old to the age of 5 or 6 than having to go with different peoples or different places. Plus, if I work in the same place and I already have a routine of waking up, dropping off my kid in the same place, I'd rather do that than have to switch things over and over and over. So those are things that you can use as a market strategy, and you need to know the demand and supply in the area. You need to know more or less, how much will people pay? Is it worth it? I had a client that has after school pickup, but she has multiple daycares in the same Manhattan area. What she was earning from the after school pickup did not cover the expense of the vehicle. So it made no sense. So you have to always try to calculate those things in the area. Ask questions, look up other daycares, look at the competition, see what the rates are going for. If you know a school, or if you are in the area and a child goes to that school, ask parents, hey, who picks up your child? How much do you pay? Those are things that you can always do to get to know, right? And again, location is key. Location is key because, again, in an area like the North Bronx, you can easily charge $400 a week on childcare, but you can't charge that in the South Bronx. However, in the Riverdale area, your rent is going to probably be $1,000 more than the South Bronx. Another thing is, for instance, infants, right? Let's say that you want to teach parenting or breastfeeding classes. You can have an all infants daycare. And yes, the the payroll expense is going to be higher. But now what happens when you incorporate teaching new parents breastfeeding classes, or you just want to be able to give that service because you know that, 2 buildings down, you're going to have a pre-K program where you're going to be able to offer everything else. Those are ways to kind of come up with income and marketing. Those are good strategies that you can use. And some of them might not affect your license and some of them can. But, remember, it's all about being able to offer the most possible. But again, demand and supply is key, right? And then the third question, what is your goal? Do you want a daycare with different things under your umbrella, like I said? Or what if you just want to be a stay-at-home mom where you get to pay your bills and you get to stay at home with your child, raise your kid at home, and you get to make money? I mean, some people just want a comfortable lifestyle, and that's okay too. But those are things that you have to know, because what happens is that when you know what you want and then you start calculating your expenses and what type of work you're willing to do, because maybe I don't want to deal with dance classes, maybe I don't want to deal with infants, but maybe I do, maybe I don't. What's going to really make you happy, and what exactly are you looking for? Are you looking to build wealth, or you just want some type of employment that you can control and balance out with personal life? So those are the difference. Those are things that you have to look at when you're considering opening up a daycare, right? So now let's create a budget for operating a daycare. Right now with the pandemic, honestly, I would say that everyone should consider sitting down and creating a budget as if they are opening up a new daycare. Because right now we all incurred a lot of debt. We had loss of income. There are people who used to work, in the job locations, and now they're working from home. And after the pandemic, the employer figured out that it was better for them to stay home. The need might not be there, but then again, it could be that now, because of this hard economy, people are going to look for 2 and 3 jobs at the same time. And now there is a surplus needed of daycare providers, but if you were to sit down now and just calculate what it looks like and what your expectations were or are, you will be able to determine where you want to go after this or how to get there, right? So I don't know if many of you know what the envelope system is. That's kind of like an old school thing. I don't know if you guys know, like, usually, like, my grandma used to go to the bank teller, and she used to request her money in certain bill denomination, because she would put little envelopes for electricity, for cable, for rent. That is the same system that I'm going to teach you. I know that we are in a virtual world where you have bank accounts, but you can still continue to keep it the same way. So let me just adjust this here. So this is a sample budget, right? And with a budget, what you do is, your budget is what you estimate that you're going to make and that you're going to spend. And your actual is what you actually do, and that you learn at the end of the month. So in this example, for month 1, I expected that I was going to earn $14,400 in childcare. I have space for registration fee, $50, and I expect to get $1,200 in the food program. What I actually did earn was $13,200 and only $1,014 in the food program. Now my fixed expenses are my rent, camera, clock-in machine, cable, and my legal fees. Those are fixed, so everything that I budgeted was my actual. But my varied expenses, my electricity, food, trips, and supplies, I expected to spend $620, but I actually spent $578. So here's how we calculate the final results. You see that we have your income, and then in the bottom, we have your total income, right? Then we have your expenses. Your expenses are your fixed expense and your variable. You see the $1,470, and then you have your $578. And in the bottom, you can see that you have total expenses, right? That leaves you with the profit of $12,124, and I'm going to put $500 towards my debt expense, and now I have $11,000 in savings. If you look at the last column in your varied expenses, you see that there is a balance column, and you see that it says electric $9, food $13, trips $5, and supplies $15. So you're going to imagine that you had that $620 you had in different envelopes. You had each envelope labeled. So when you went to pay the electricity, it was only $66. So in that envelope, you have $9 left, right? So let me show you this right here. Here is month 2, right? In month 2, you notice how we have the $9 in your balance column, but now we bring that over to your month 2 because the envelope stays the same. So you have your $9 left over, your $13 in food, your $5 for your trips, and your $15 over in supplies. But you budgeted that you're going to actually spend for month 2, $61 in electric, $400 in food, nothing in trips because you have no trips scheduled for this month, and $80 in supplies. But what happened in reality was that that's not what you spent. You had this left over, right, from the prior month, and now we brought it over to the next month. So this example I'm going to give you with electric. Electric, you originally had $75. You spent $66, you had $9 in your envelope. You added $61, but in reality, you spent $80. That means that you had $10 less because you needed to take $10 from your savings to contribute to your electricity. Instead of like last month where you budgeted $75, but you spent $66 and you had $9 left over. The purpose of basically the budget is so that all the balances carry over. And what happens is that not only is that going to control your expenses because you're going to be more aware of what your expenses should look like every month, but it is also going to help you keep accountability for every single dollar that you earn and that you spend. And that's going to help you save more money because in this example of month 2, we had to take money out of our pocket for it. But then came month 3 and we didn't. You see now month 3 in the expenses, as you can see, we didn't have any budget left over for the electric, but we assumed that since it was $80 last month, it might just be $85 this month. But in reality, we spent $82. So the purpose is that every month, you're going to basically go down your envelope. And it's like if you have multiple little banks, like let's play Monopoly. We have multiple banks for every single envelope and expense. And every month, we're going to exchange dollar bills and make the payments and keep the money and keep the balances. Now, because we are in an internet world, we now use online banking. There are certain banks like Capital One, you can open up multiple checking accounts and you can label them. So you can have one for fixed expenses, one for variable, or you can even have rent, camera, everything separate, right? And what happens is that when, the best way to learn is to do it like this, where you have your envelopes, everything manually, until you get the grasp of it, and then you can keep your balances on a paper as a whole. There's going to be forms that I'm going to send over to Danny so that anyone that's interested in budget forms, you can actually have, and you can just start practicing it. As a business owner, you're not going to have the same budget every month because the income and expenses vary. It's very different if you have a set income, like if you have a job and every week you get paid $500 after taxes. You know how much money you're going to get paid, you know the day you're going to get it, and you know the day that your expenses are due and how much is due. It's very different when you have this type of business, and any business, because in childcare, for instance, there's some parents that pay you weekly, there's some that don't. You might get ACS deposit today and then food program in 2 weeks. Everything varies. 1 week you might get income and the next week you don't, and then that week is the week that all the bills are due. It's gonna vary. But if you first start with your old school envelope system and you keep your balances carrying forward, you're going to understand where everything is. And, you're going to catch things fast, like food. Month 3, and based on the budget, we spent $600 on food. Why? Was it that it was summertime? Was there spring break vacation in school and we had kids in the daycare for extra hours? Did we have a party, that maybe we spent extra money? Or maybe we found certain things on sale in BJ's that we know we wanted to take advantage of the sale, but that those extra $200, we don't have to spend it down the line. Little things like that change, but at least what happened. Where did this money come from? How did this happen? How can I make more money? Am I spending too much money? For instance, gasoline, and let's say the after school pickup. Wait a minute, I'm getting $200 a month for after school pickup, but I'm spending $140 on gasoline, not including employee and the stress. Something's not right here. So you can catch things fast. That's the whole purpose of budgeting, right? So again, you have knowledge and accountability of every dollar spent, and you have a clear expectation of income and expenses so that if you need to put money to debt, or maybe you can increase your income, or maybe you have a new goal. It makes all the difference when you know things when they happen and when you have them like already in place. And believe me, it's tough building a business, growing a family, trying to do new things, innovation. It's tough. But if you set yourself to this type of mindset, it's only going to come, it's going to just become a habit. And you're going to be able to pick up, and you're going to be able to do things faster than you believe, quicker than you think. And that also gives you confidence as a business owner, because now you're like, okay, I know this. And it just becomes so much better for you, so much better in any way, shape, or form. So now, the pandemic, how to adapt and recover. And again, I went through all of this before, because a lot of the daycare providers that I've spoken to during the pandemic, the issues that they had were because they didn't know the main components of having a daycare registered and operating and doing everything correctly and what is best for their needs. When you have those things on point, situations like a pandemic might not be as bad as we think. And I say this not because I'm an accountant, I'm a human being, but because you are prepared for things and you are ready for things faster. So we learned the business budget, right? Now we understand where the deficit is. Now you understand where is the income loss. Where are you spending too much money? I learned this pandemic that I spend a lot of money on food. I learned that. You start picking up on things and you start doing things. Listen, even in general, I started cutting my son's hair. Now I said, oh, you know what? I'm not spending money on the hair in the nail salon, and I'm doing my own son's hair. I'm doing everything. You start learning things, and now all of a sudden you're able to do things on your own without having to spend extra money, and little changes go a long way. So now, like I said, let's pretend that you're going to start brand new, because technically that's what we're going to do. You're going to pretend that you are opening up a brand new daycare, and you're going to write down what your fixed expenses are, what your variable expenses are, and the money that you are assuming, or at least the children that you know are going to guarantee to come back, so that at least you know what money you can expect and what you can do to make extra money. Now you know if you have extra space in your daycare for more kids. Maybe you want something else that can bring in extra income, something that perhaps you picked up now, because you know what, our brain happened to quiet down during this time. So now we know other things, and now we have the time to think and elaborate and, innovate. So we understand where the deficit is. Now we know what are the unneeded expenses. Now we know how, or what would it be to go back to square one. Remember when we weren't so comfortable and we had to go to Staples to print documents because we couldn't afford a copy machine, and all of a sudden we got one? Remember that struggle that we went through? Now we remember that. And those little things are going to make you remember and understand that, you know what, that wasn't so bad. I could cut corners with this expense, because now I know that I can do things differently. So again, like the food example, I spend so much money. Oh my God, it's ridiculous. And then we think about that now in this pandemic, it's like we can't make the same trips to BJ's as we really would. Do we really need all those boxes of juice? Those are little things that you can think about in your daycare. Like, you know what? Maybe we don't need to spend money on that. Maybe we can use that for this. Little things that, again, when you quiet the brain, they just float. They just float, right? So creative ways to compensate for the income loss. Develop an action plan. Research law changes. For example, here in New York, I know that DOH was allowing family group daycares to have more than 12 kids for the pandemic in order to help those first responders. So, hey, maybe that is extended and maybe you can take more kids than you regularly need, right? Find unused items that you can sell. Right now, although we are in, an economic issue, but guess what? There are still people taking advantage of it. So maybe you can sell things that you don't need and make space for better stuff, or just get rid of things and make extra money. Look for grants. Paycheck Protection Program changed, and now they allow sole proprietors like LLCs, independent contractors, DBA, to qualify for the Paycheck Protection Program, even if they don't have employees. Take advantage of that. Pandemic unemployment. If you filed the Schedule C, like if you have a single member LLC or a DBA and you filed the Schedule C and you have no employees, you are eligible for both unemployment and for the Paycheck Protection Program. Grants. I have a lot of daycares, especially in the Inwood area, that were able to get grants by Presbyterian Hospital and Columbia University. Look for grants. There are always ways that you can get assistance. Now that's everyone is concentrating on helping everyone else. So there is help. It's just a matter of looking at the right places. And think about it like this too. A lot of people are, like I said earlier, gonna probably work 2 or 3 jobs. So they're gonna need the childcare help. And even if they don't go back to work right away, I have a 12-year-old at home that I would love for any of you to take. Like, there are parents that just might be overwhelmed at this moment, especially if they are working from home. Even like the school teachers, I mean, they're doing the same job, which is even harder now. So maybe you can offer, let them know, listen, the daycare is not open, obviously. We are taking precautions. We are making sure that we're clean. We're making sure that, we keep our space, our distance. But you know what? Maybe you need a few hours off. Listen, if I'm at home for so long and I know that I do have income sources from unemployment or I'm working from home, if my income didn't change, it wouldn't bother me to spend the same amount of money on childcare that I spent before. The only difference is that I can walk to your house in pajamas and no makeup on, as opposed to walking to drop off my kid in a rush because I have to get to work. So, those are little things that you can offer. Another thing is ways to retain children. Show sympathy to parents. Listen, we are going through a lot. Believe it or not, my father passed away during COVID. And there are people who cannot emotionally or mentally handle everything that is going on. Show sympathy to your parents. Call those children up. FaceTime them. Just let them know that you're there. People, remember, you are a family to them. At the end of the day, it takes a village to raise a child. You are a family to them. So reach out to them. Show them that you care. Offer online services. Again, if they're working from home and they need their children to be distracted and they have an iPad, offer them something that can help them so that at least the parents have more of a peace of mind. And I guarantee you that if a parent is still earning the same income, either from working from home or for the pandemic unemployment, which is giving extra money, they will be more than happy to help you, to give you money, to even give you a donation, because you are going above and beyond for their children. So again, never be afraid to visit square one. Remember why you started. Show the parents that it takes a village to raise a child. encourage them for a night out or a day out, even if there's not much to do with the pandemic. But you know what? Just hours outside of the house helps. People remember who was there in scary and tough times. Be that rock for them. And again, if you're reopening, let them know. Listen, I know you're still working from home, but understand that maybe your kid might drive you crazy. Just, bring them over. We'll take care of that for you. And ask them for help or any opinion on what they think that their child needs. I understand that my son needs 17 meals a day. I would love to speak to the Board of Ed and see how does they do it from the time that he's in school. Get to know what these parents have learned in this time home with their kids. Because when you get to know that, now you know what service you can give them. It's sales. At the end of the day, it's sales. Also ask them if they want anything extra. How can you improve the quality? And just be involved. Like I said, people need people right now. So if they know that they have someone on their corner to help them, even if it's just to clear their minds, that goes a long, long, long way. And I gave this advice to a few of my daycare months ago. And those daycare owners have been getting paid from the parents without their children being in the daycare. Because it's just a matter of just reaching out and just being there. And again, remember why you started. Tough times do not last. Only tough people do. So right now, this pandemic is scary. Everything that's going on with everything, the news, you just turn on the news, it is scary. But remember, this is not going to last forever. And the only thing that a person thinks about when they think about a family is how will they support and how will they take care of. Just think about that. Any husband, wife, doesn't matter what type of family, doesn't matter. The first thing that they think about when they think about children is, how can I afford? Who's going to take care of my kid while I make the money to afford them? You guys are the first people that we think about when we become adults. You are the first people that we think about. So understand that you are the first people that we need. What you need to do is sit back, remember why you started, why you want to do this. And that's going to help you understand and tell me what is it that I need, because maybe I don't realize that I need some help with my son. Maybe I don't realize that there are things that you can help me with because my judgment is so clouded because of what's going on. But if you get to that level, I guarantee you that not only will parents be more than happy to come back to you, but they will be more than happy to bring more services to you. And if you start offering different things like a 2-hour dance class on a Saturday, they're going to have their child join. If you sit there and you do things that's going to allow them to be able to give their children extracurricular activities in the same house or under the same people that their children are comfortable with, they are going to be more up to that. They're going to want to do that. So, again, I know it could have been fast, what I said. I told Danny, I speak pretty fast. But understand that it's all about going back to square one. Go back to square one. Think about your expenses. Think about your future plans. Think about what is the best way for me to avoid these taxes. Listen, pay attention to what's going on. These politics, they fight. Big corporations, they take money. Understand that we are the big corporations. We, as C Corps, S Corps, LLCs, we are those people. Learn how you can save money on taxes. Learn how you can take advantage of the system in a way where you are utilizing your money to work for you. You can do different things. Childcare is not limited to just a child. It's not limited to that. And when you start thinking about that, especially now, once this is done and over with, trust me, you're going to be 10 steps ahead and you're going to be able to push through. So right now, what we need to concentrate is income. Try to get income that we lost. So let's look for grants. Let's look for unemployment. Let's look for the Paycheck Protection Program. Let's look for minority-owned business loans. Let's look for all those type of programs. I know New York City has a lot of that, right? Let's cut down on expenses. Let's reevaluate the things that we spend money on and what do we have that we possibly don't need. And most importantly, let's nurture those parents and nurture those children. Remember why we started. Do this from the heart. And I guarantee you that you're going to keep those children and you're going to bring in more children, because God only knows how exhausted I am with my son. I have one. So I could only imagine all these other parents having to manage and balance home life, working from home, dealing with this pandemic, dealing with everything that's going to get to them. So you guys are their front line, and you guys are the ones that you jump on it, you're going to be able to nurture them, and you're going to be able to pull through. So I hope that this was a lot of information. If it wasn't, here is my information. You can always as well. I'm going to give some stuff to Dani so that she can give you guys once you see the recording and everything. But any questions, feel free to text, email, call. My time is free. I love daycares. I was raised by a living nanny. I'm a stay-at-home mom. So I'm all for you guys. And that's it. I don't know if there's more questions, Dani.
Yes, we do have a couple. Gat wants to know, are we charged for the unemployment?
Yes. So when you file your taxes every 3 months, there is a portion on the left side of your tax return, in New York at least, and it's called unemployment insurance. You do pay that. Now, depending on how much you've paid and how much unemployment is being charged to you as an employer, is if it'll go up or if maybe you have a balance left over. But you have already prepaid for that, for the unemployment.
Okay. And T wants to know, from a tax perspective, is it best to pay a teenage tutor, dance teacher, or have them as a volunteer?
Oh, I would say volunteer, especially if you want to save money. Yes. And teachers, internships, all of that.
Okay. And Delia, I hope I'm pronouncing that right, wants to know, where do I go to register for a sole proprietary or LLC?
So sole proprietors are done with your county court, and LLC are done with Department of State.
Okay. And that's for all states?
Yeah. Mm-hmm.
Okay. I think there was a question in the chat. Nikea wants to know, can you send that spreadsheet if possible, or attach
yes.
it?
Yes. I'm gonna give you guys a sample and some blank budget sheets so that you can use.
Okay, perfect. Well, I think that's all the questions. Thank you so much, Anays. This was very informative. I'm sure all the attendees got so much information and learned so much, and I'm again very appreciative for you being here.
Thank you so much for having me. It's my pleasure always. And again, any questions, feel free. I don't charge for questions. I give them with lots of love and care.
Yes. And as you guys can see, she has all her contact information here on the screen. So be sure to take a screenshot, or I'll send it over to you guys tomorrow.
Yes.
Okay. Thanks, Anays.
Thank
you everyone for watching. Have a good night.
Yes. Have a good night, everyone.
All right. Bye-bye.
Bye.
Thank you so much for watching this webinar. I hope that you enjoyed it. Please be sure to subscribe to childcaresites.com to find out about more upcoming webinars. And don't forget to follow Childcare Sites on Instagram at Childcare Sites. While you're at it, don't forget to check out Pay Plus Accounting. And thank you again to Anays for sharing so much valuable information. And I'll see you guys in the next one. Bye-bye.